Today is the 5th of April 2011, and we'd like to welcome you back to Megatrade101.com's video presentation on the foreign exchange market. Now that we're entering the second phase or the second quarter of the year's trading, the first quarter hasn't had much of a difference, especially so for the US dollar, while the index is still below the 7609 level and tried to make an attempt on the previous low in the range area of 74.20 to 75.25 has maintained its levels on the low side of the charts. The continued political whirlwind on the Libyan crisis and the Middle East tensions arising from these political changes also had led oil prices and gold reach its historical levels done on the first quarter of the year, and market sentiments for investors and especially so for institutional traders hasn't changed much, especially so that institutional players have taken advantage of these major market conditions that have made the acceleration of prices to their record levels. Today here you can see here on the charts that we have 5 comparative chart formations on a weekly basis with the euro yen, the pound sterling, the sterling yen cross rate, as well as the dollar yen on a weekly basis. Now, with that said, the European currencies had been the most, as far as being benefiting from all this crisis, together with the Asian currencies, has led the US dollar at much of its lower levels and hasn't gained any tractions for a recovery. The level and degree of difficulty came about especially so when the yen accelerated to and rallied to its strongest level. Here you could see at the 76.60 level, where the Bank of Japan had to intervene in the market together with a concerted effort by central banks that would be able to halt such strength, and most of the currencies, as far as the market is concerned, have been at the levels and is strengthening for as far as the US dollar is concerned compared with the yen, is actually in the area now coming back prior to the event in Japan as far as the tsunami is concerned and the nuclear crisis. The Japanese yen is back to its former levels of 84.98, as you can see here on the chart. And you could see the similar pattern as far as the chart formation with the sterling yen compared with the dollar yen, where the configuration of bars on a weekly formation had been more positive. However, we did mention since December that the prices on the cross rate on the sterling yen as well as the euro yen would be on a stronger tone had it not been for the flux of price fluctuation, as we call it, that there were some heavy losses as far as other speculative trades are concerned, which basically have eliminated retail investors who couldn't even simply tolerate such wild fluctuation on a single day's price range. So here, between the sterling yen and the euro yen, comparing it with the actual chart of the dollar yen formation on a weekly basis, has all its similar movements, where the trend now is obviously heading north of the chart, where you could see that the sterling yen now is back to its 138.41 levels, as well as the euro yen back to the 121.46 levels. Obviously, this chart already exists as far as its trend line is concerned, where, let's see if we can expand this way and transforming it into a monthly, where a Fibonacci fan formation had been drawn, where relatively it's resting on the 50% at the current price level of 121.45. So between the high and the low, okay, the down formation as well as the regular Fibonacci retracement is right smack at the middle of its 50% retracement. Now the question there is, would there be a possible drawback for a correction? Of course, there's always a possibility for a correction in any major market, whether it goes up or it goes down. However, at this point in time, a continuing rally for the euro would still be in the making, since there is no fresh incentives for the US dollar to move higher at this point in time. And relatively, it would be quite difficult for the rest of the market to follow suit, as long as the dollar wouldn't make much of a headway, of course, unless Ben Bernanke from the Federal Reserve chairman would have something to say about it. So what's keeping the cap on the euro as well as the pound, as far as the majors are concerned, is simply that there is a stronger probability that the US dollar would have to have a recovery after the first quarter's movement, and naturally, based on its cyclical pattern, this week until next week, everybody might be surprised if they would see a recovery for the US dollar. But however, it doesn't mean that there is a reversal pattern in the making for the pound as well as the euro, simply because it is definitely on a much bigger scale as far as the pound in itself. Here, if you look at it on a weekly basis, and let's expand it this way, it's well above the Ichinomoku cloud formation, as far as it is resting, and it already touched its uh, support level as far a Fibonacci rising trend line is concerned. And looking at its formation now, we're looking at a scale or price range touching these levels, although a continuity of the up move would have to have a sustaining level of volumes, where if you look at it on a monthly basis now, the 1.63 to 1.6450 for the month may be in the making, as it is attempting to reach its 50% retracement on the Fibonacci levels. Stochastic still positive, so as the relative strength index has more room to move higher. Momentum is still building, and naturally with higher volumes and open interest in the futures market are still building up. Until such time that there would be a recovery on the US dollar, we would still call that the euro as well as the pound, but more particularly for the euro yen as well as the sterling yen cross rates, would be more bullish than ever. Like we said, do expect some corrective moves along the way as price adjustments and technical adjustments are considered. So in areas where entries are important, always go for the unexpected correction, although by the time that it does, it is much higher than we would have anticipated. Thank you very much and have a pleasant day, and hope that this would help you in your trading, the foreign exchange market. Have a good day.